Hello and welcome to the ISE ETF and Index Outlook for June 3rd, 2012. This is Patrick Ceresna. As always, we start off with a look at the S&P 500 using that SPDR exchange traded fund symbol SPY. We had that flagging formation we talked about last week, and we're suggesting that it could go even as high as the 134 to 136 area. We had a very brief stint where we traded up towards the 134 level on the upside and almost immediately reversed, beginning a new downdraft right to the tail end of the week here. At this stage, we are now in final stages of the final down leg of this stage of this correction. We don't necessarily believe that these are going to be the lows of the summer, but we certainly think that there's going to be a tradable bottom and a subsequent bounce that's going to occur probably sometime even this week. Really at this stage we probably may start the week with some initial aggressive selling, and we might even see a drop down towards 126 to even as low as the 121 level on the downside. But if that occurs with some substantial amount of fear in a rapid fashion with some very big spikes in volatility, more than likely that a selling will emerge as being a short-term buying opportunity, and if there is going to be substantially further weakness going into the second half of the year, it more than likely would be after a substantial bounce and consolidation, and then maybe some weakness into that July and August timeframe. Staying within that theme, when we take a look at the ISE Cloud Computing Index, which is the symbol CPQ, this is actually the chart of the ETF, the SKYY, and as this now is trading down to about the 17.5 level, all the lows from November and December all occurred around that 16.5 to 17 level. During this week, we expect that this Cloud Computing Index could trade all the way down into those lows and find its short-term bottom. We do believe that if you do have an opportunity at the 16.5 to 17 level on this index, it may very well represent a short-term opportunity to capitalize on a bounce higher. Again, we do not believe that this will be the buying opportunity of the year, as there probably will be even further weakness again going into the latter part of the summer, but there should be a tradable bounce coming off of lows within those support lines. Next year, we'll take a look at the ISE Global Engineering and Construction Index, which is symbol CVL. The ETF trades under the symbol FLM. We not only had a test of the 205, 210 level, but now with that Friday selling, we've now broken to even a lower low than those November and December lows, and the target right now lies just about $5 to $10 lower, down around the October low, which occurred right around that 195 level. Again, we do believe that there is room for this to continue to sell down to those levels early this week, but just as we were anticipating with the S&P and even with all the other indices that we're analyzing, we do believe that there will be a short-term opportunity for a tradable bounce somewhere off these kind of lower levels. Finally, the last index I wanted to look at was the ISE Global Copper Index, which is symbol ISC. The ETF trades under the symbol CU, and these copper stocks as well have now approached their October lows. The bottom end was about the 275 to 280 area, so that's about another $10 to $15 lower on this copper index. Now the commodities have been particularly weak, and what's interesting is that a lot of the gold stocks have already started to reverse, so the copper index is quite oversold and is long overdue for some sort of a short-term tradable bounce. We do believe it will come down at these lower levels, and we think it will represent an opportunity, but we still think though that there could be even $10 $15 more on the downside. Want to look for some sort of a sign of real fear selling, and then and that may represent the opportunity to act. That was your ISE ETF and Index Outlook. Thank you for joining me.